Hi traders, I want to show you an example of a bearish bat pattern that's set up on the Australian US dollar on a 5-minute time frame. The first thing we want to do is we want to find a high time frame key areas of support or resistance. So you can see 4-hour chart nicely compressed. We have higher highs, higher lows, a nice downtrend here. If we take our Fibonacci tool, we draw it from the high down to the low. Okay, we want to find an area of potential resistance in a downtrend. So if you take a horizontal line and just drop it from the high, just work your way down. Okay, here again you can start looking for confluence areas with the fibs and the support resistance. Now I just want to take you down to this level here. You can see we have a nice price flip in terms of support resistance across here. You see how we have on the left hand side we have resistance, becomes support, okay, back to resistance, back to support, support again, rallies, comes back, tests resistance just through that 38 level. So it's not an exact sort of match up with the fib and the actual horizontal support resistance level, but remember we're dealing with zones, okay, so you've got to be flexible in terms of these levels. We also have, you see this little order block up here. The price broke heavily to the downside. So prices come up and actually spike that level pretty much to the pip. We've had a nice release from that area. Okay, here again we're not looking to just click sell at these levels. You can sell at these levels if you sort of become good enough, especially these little blocks here, but we're using patterns, okay, to confirm that the area is holding and to reduce our risk. So if we move over to the 5-minute chart, this is where the pattern actually set up. You can see that price has already come off this level quite aggressively once rallied back up slightly. You see it comes slightly higher, picks up more orders, and come off quite nicely once again. So if we look at this leg down and we take our Fibonacci tool, we draw it from the high down to the low, you can see prices dropped, it's rallied, okay, and it's just come shy of that 50% before starting to retrace. Now remember, we use these fib retracement levels as potential indications of what kind of pattern we could look for. Okay, when price gets to sort of 38 or 50% and starts to pull back, we want to start looking at the possibility of a bat pattern. Okay, and when you hit price comes up to sort of a 62% level, you'll start looking at a Gartley pattern. Okay, so that's really the indication of what I'm looking for. So there's the retracement. If we now take our fib tool and we draw it from this low up to this high, okay, now in terms of the actual bat pattern, we're looking at that 886 area. You can see in this example we have the 79 and 18 extension lining up pretty well. So you could choose to take a trade there. Okay, that's not quite a Gartley pattern. A Gartley, in terms of the way I'm teaching it, I'm showing it as Scott Carney's Gartley, which is the 618 retracement. Okay, so we're looking at a bat between the 38 and 50 level, and here again, you know, there's not much difference on these swings, only 5 pips. So really your decision if you want to look at the 79 or the 886. Okay. But for a retracement of less than a 62, I normally look up at that 886 area. Okay, so that's the completion point of the bat. If we just had to label this point up here would be X, A, B, C, and then you look for a retracement back up to D point, which would be up here. Okay, with a stop loss, the way I like to trade it, with a stop loss above this swing high. So we just step this forward. You can see price starts to actually retrace from these lows, and you see the 79 retracement starts to move up. So we're going to go to our platform and we put a pending order in on a sell limit, okay, at, actually I haven't showed you where we wanted to sell at, but that's the level right there. Okay, so just go back, pending order, sell limit at 1.066, and I'm going to go about a pip below. It's a 5-minute pattern, so there again, remember, either pretty much on the number or like a pip below. If the larger patterns, like your hourly patterns, or normally put a couple pips, maybe 3-4 pips even on extreme circumstances, but anywhere from a pip to the exact number. The last thing you want to do is miss the trade, by a pip. Okay? It's happened a good few times, so just be wary. It probably will happen at some stage. 0.66. I'm going to actually go in at 70 because of the spread. So literally around those highs, 3 pips will include the spread. So that's a 10 pip risk on the trade. Okay, in at 60. Well, let's put a stop at 70. And in terms of take profit, there again, because it's a higher time frame key area, I want to watch what happens once price actually releases. Okay, if we get up there. Let's just follow this along. Step this forward. These are 5-minute candles. It takes a little while to get there. Okay, eventually there's the spike up. You see it comes bang to exactly the 886 number. Also reference, you see this little bullish candle. You see the last bullish candle before price broke away. Okay, very, very powerful in terms of looking for trading opportunities. So now we're actually live in the trade. Price is still plodding around a little bit. Here again, I don't want to be aggressive and stop moving the risk out of the trade, because price can always spike up a little bit higher and pick up a few more orders. Okay, now you can see we start to break down a little bit. Let's just have a look at the hourly chart first of all. I just want to get rid of these fibs here so it doesn't look so messy and we can actually see what's happening in terms of the candles in the price action. So there's the rejection. You see how we have 1, 2. We now have that bearish bat and starting to move down. If we take this horizontal line here, this is the first sort of problematic area here. We're going to see price move through. From there, we now have, if we move this down, we've got pretty much a level down here. You see this spike down, it's taking out orders in this block. Okay, so I wouldn't expect us to have too many orders stacked around here. Maybe find something around here possibly. We also have, you see this little trend line here. Okay, we want to keep an eye on these little trend lines. Nothing much there and there, just for management purposes. Okay, so this is the level over there. Let's go back to the 5-minute. We've got some areas that we're watching, and here again, if you want to really micromanage these things, you can. Remember, we're in a big downtrend, so don't mind giving this a bit of space. It comes back, tags it as resistance. Now it's moving down. See this little block here on the 5-minute. We want to see price clear that area. Okay, so now we have it a release. You see it comes back, tests this area right here, resistance. Okay, takes a leg down. Let's just move over to that 4-hour chart and see what's going on. I'm going to actually just get rid of these trend lines quickly so we can see what's happening. You see the spike down and it's come back, rejected quite vigorously, and looking for a move back down. In terms of targets, we've obviously got this area here. That's about 50 pips away, and then we've got, you see this area here, this block right here. That's a pretty good area to watch. Just look at the hourly chart. We take a fib from the low up to the high. We want to just see where we are in terms of levels. You can see we've actually, on this leg here, we came through all these numbers already. So we've got this block here, and then down to the 70.7 area, also of interest. I reckon a target area around this level here, okay, the top of this block, just below the 50, looks like a good number. You'll also be sort of picking up orders around or just below this area here. So 1582, that's a level I want to watch closely. I'm going to put a take profit area at that level. So you have 582 plus the spread, so we've got 5, let's call it 586, okay. Remember, still got to stop in our original place. We're up 23 pips. If you want to, you can reduce the risk on the trade already, but I like to just leave my stop where it is for now until we start clearing some levels. Okay, so we have another spike, still not clearing this trend line. Okay, now we're closing below that trend line for the first time, so we should start seeing a release now. And you see also we've got this area in here, this base. So what I'm going to do is look to get my stop to break even, currently 36 pips up. Okay, so stop is now break even 60, and our target is down at the lows. You could also look to reduce your risk to just above this high if you wanted to. I want to see on the hourly chart a close below. Just go to the hourly chart here. See these lows? I'd like to see a close below those lows before I start getting that stop down or that move up. Okay, so you see bouncing at the lows, the back end of the trend line tagged at the moment, still moving up here. I want to see that level hold. Okay, so now we're moving back down. I want to see these lows here taken out. Just move this down here. See how you have support in here, now holding again. I want to see that cleared. I'll step this forward a little bit. So you have this micro level here, support becoming resistance. See if we can run those lows. So now we're having a run at those lows, still not aggressively moving down. It's starting to break down nicely, up 45 pips on the trade. Okay, let me just zoom this up here. This area here, I want to see that hourly candle close below this range. Okay, just a good indication that we've got the bears in control. You see this area on the left here, keep a close eye on that. Step this forward on the hourly chart now. Big spike up. Okay, just have a look at the 15-minute chart here. See that big spike? This is news. Comes back up. We're testing that area there. Heavy release now to the downside again. Let's have a look at that 4-hour chart. A 4 hour starting to break down nicely. Slowly moving towards that target area. Up 49 pips. And what I'll do now with this spike, I'll get my stop just above this, so we'll lock something in. This is around what if 644, let's call it 648. Okay, 648. So we'll lock something in to the trade if it moves all the way back up. Now I'll just follow this along. Price is breaking down again, almost at our target. Okay, here's the 50 bouncing, just running those lows. We're coming into, remember, that 4 hour, the 4 hour block down here. I want to be above that level for taking profits. So up 65 at the moment. And what I like, I want to see this close here, this base here. We want to see the candle close below this area. Okay, so there's I'll take profit being hit now. Let's just go to the account. And you can see there, so we've got 74 pips for a risk of 10, so real nice risk reward on the trade. You have, again, not in any rush to just aggressively get the risk out of the trade. This one didn't come back, almost sort of spiked up on this one, tagging the back end of that trend line just about, and then we released back down and just step this forward. You see the release there? Okay, so that's why I say very, very important. You see that last bearish candle, you see how it releases off that area. You want to watch those areas when you're managing your trade, as well as when you're placing trades. Okay, you see here, you've got another little level there. You want to see a price hold off there. Okay, so nice little bearish bat pattern that's set up on the Australian dollar 5-minute chart.